Ever wondered about what the future might hold for interest rates? Well, you're in the right place. The Federal Reserve, the central banking system of the United States, is expected to bring an end to its ongoing cycle of interest rate hikes. Instead, the buzz in the financial sphere suggests a shift towards easing policy. Easing policy, in layman's terms, means that the Federal Reserve might be lowering interest rates to stimulate the economy. Now, let's talk numbers. Traders are factoring in a 55.7% probability of a quarter-point rate cut by March. That's more than a flip of a coin, and it doesn't stop there. Some big names in the banking industry, ING and Barclays, are forecasting a series of rate cuts in the year 2024. ING is predicting as many as 6, while Barclays is a little more conservative with a forecast of 4. However, it's not all unanimous agreement in the world of finance. Various officials from the Federal Reserve have expressed diverging views on the need for these rate cuts. Some have emphasized the importance of keeping a close eye on inflation and economic activity before making any moves. It's a delicate balancing act between stimulating the economy and keeping inflation in check. And then there's the man at the helm, Federal Reserve Chair Jerome Powell. Powell has adopted a cautious approach towards these predictions. He believes it would be premature to speculate on when policy might ease. Powell's stance suggests that any decisions about interest rates will be guided by careful observation and analysis, rather than hasty predictions. As we can see, the future of interest rates is far from certain, and will depend on a number of factors, including economic activity and inflation. But what does Jerome Powell, the chair of the Federal Reserve, have to say about all this? Indeed, Powell's perspective is crucial in understanding the fickle world of interest rates. In a recent 60 Minutes interview, Powell gave us a much-anticipated confirmation. The Fed's forecast for 3 interest rate cuts in 2023 remains as solid as a rock. This consistent stance from the Federal Reserve signals a clear strategy, one that is not swayed by the winds of change or the whispers of speculation. Now let's take a look at 2024. The Federal Open Market Committee, a key player in the interest rate game, has forecast 3 further cuts for this year. These cuts are expected to bring rates down to a cool 4.6%, a significant reduction, wouldn't you agree? Powell also dropped a hint, a breadcrumb for us to follow. He suggested that the first cut could come around the middle of the year. Now, the crystal ball of economics is not always clear, but most economists are predicting this cut to occur in May or June. Bank of America, however, is placing its bets on June. So, the mid-year period is something to watch closely. But here's the icing on the cake. Powell emphasized that rate adjustments will not be pulled like rabbits out of a hat. They will depend on economic data, hard facts, and figures. He firmly denied any political influence on Federal Reserve decisions. In his own words, integrity is paramount. So, as we look to the future of interest rates, we can expect decisions to be based on economic data, not political influence. With Powell at the helm, it appears that the ship of economic policy is sailing on the course of integrity and transparency.